afternoon, students. I hope I am audible to you. Right, thank you. Right, so we can start the discussion now. Basically, as you know, this is a discussion of a mock exam paper, and today we'll also get our pre-scene analysis that was recorded at CA yesterday. So this is again important. While you have already a pre-scene, the CA has conducted this pre-scene analysis. I mean, the mock examination for you to really get the feeling and to assess whether you are ready for the examination. Because very often there are a lot of students, they don't test themselves prior to the examination, and they just go and say, most of the time, I didn't have enough time, I didn't answer all the questions, and struggle. So that is why if you did this mock examination, which is an exam type paper, you will see where you are. So therefore, when I explain the answers, specifically writing answers is the key. How to write the answer. I will also show you the suggested answer for this as I discuss how to build that suggested answer gradually. Because now again, another bad habit is to read answers without you writing the answer. You will really get stuck in the examination if you are not very thorough of how to build your answer with confidence. That's very important, right? So with that purpose in mind, I will cover corporate governance, risk of misstatement related areas in the mock examination. Dr. Isuru will conduct very soon the rest, which is on the consolidation. And the beauty of this paper, you will also see the interconnectivity with the consolidated questions and risk of misstatement, right? So those students who answered the paper, right, they are in a better position to mark their answer. So I really expect you to have your paper with you and see out of this marks allocation, what is your score, right? That's going to be the discussion. So let me share the screen and show you how to develop step-by-step answers for this segment. And at the same time, we will make it an opportunity to to uh, basically revise some critical areas of the syllabus. So give me a minute until I share all the documents on the screen. And at the same time, you should have the pre-scene, mock exam pre-scene, which is actual exam conducted last time, the last examination pre-scene. So have that also with you. And then obviously, if you have your answer script, because it's a mock exam, so please have it. Right, I'm going to share my screen now. Please let me know whether it is audible, whether you can see the screen. Sorry. Can you see my screen now?
Yes, sir, you can see.
Thank you. Right. So this paper, can I get some feedback from the chat? Those who face this paper and you were able to manage your time properly, or that you are just attending today to learn something. That is also good. But anybody who attended, were you able to answer all these questions within 3 hours? Can I get some feedback before I start? Yeah? No one? Right, no response. Okay, so looking at the question, this is an exam type mock paper, and you can see Dr. Isru will do maybe another 2 days, maybe Wednesday, 18th, the accounting standard related segment where you get 12 marks from financial instrument question, the first question about the bond. And then there is added part to that question, that is where corporate governance has been tested even this time examination. Yeah, so I think great to hear Janaka Sampath is commenting that he attempted but could not complete all the questions. So that's what I want students. Remember, all of you will not be able to manage the paper within 3 hours unless you have a very good plan. That's the emphasis. So any students who is planning the time within 15 hours, what is your strategy to get 100? So I spoke yesterday to a student who has been doing this paper for 4 or 5 times, right? And I warned him this time also will end up with the same results unless you focus on 40% of the syllabus, which you can easily achieve through corporate governance and risk of misstatement, not auditing. Now, if you think this is auditing, that's another failure, right? Because some of you really underestimate that. This is not auditing. This is CFO's perspective to risk. That is the syllabus revision that was done 2 years before. Auditing standards have been removed. Those who are looking, studying much hard auditing, don't do that. Not required. Right now, look at last two papers are different from balance 3 years papers. Why? The examiner is gradually adjusting that CFO perspective, and obviously in your paper you can see that, which you will face in few days. So I warned him that you can easily get 40% or more by answering corporate governance questions easily, by answering questions relating to risk of misstatement, the CFO perspective to risk, by answering a very easy 5 marks question from ethics, by answering some basic questions on sustainability reporting is 1 and S2 standards. Why not 40? And then even in this paper, if you really quickly answer these financial instrument questions, and then there is a goodwill, right? The two options being given for you to decide. On the acquisitions, right? And those questions are very good question. I looked at them. I mean, how you look at things like contingent consideration, fair value of contingent consideration, and deal with, contingencies. There is a legal tax case where the assessment outcome is pending at the acquisition time. How do you look at it? Things like that, right? So that accounting part definitely takes more time. So if you have a strategy that this 40 minutes I will get with less than 1 hour or 1 hour, another 2 hours you have to deal with consolidation and accounting standard. And this time paper also very easily, you can see revenue recognition. The current present from telco, some accounting standard you can easily identify which are important. So that preparation has to be strategic. And you need to be a strategist if you want to be the prize winner. I don't hope anybody to get 50. Have the mindset that I will be the prize winner. I will score, if not above 70, definitely getting 50 is nothing, right? So that has to be your ambition. So with that, if I look at if I the planning. Now let's say if you are trying to answer this question from that perspective, you will quickly look at all the questions, right? Oh, this is 25 marks. How can I get 25 is significant, right? In that 25%, so I have one part to deal with financial instrument. If you have done that basic part, in terms of the SPPI tests, I mean, you should be able to answer this question and then another 8 marks very quickly on the audit committee, right? But this is again a very specific question on audit committee, right? Now, when you look at this itself, you can see whether you know the answer or not. Advise the formulation of a group audit committee, including composition and matters to be included in audit committee charter to comply with section 9 of the listing rule. Now they are talking about a group audit committee. What does listed company tells about it? If you are a group of companies, should you have audit committee for individual subsidiaries or can you manage with the group? That's essence. And then usually what need to be included in audit committee charter? I mean, so easy. You can get 4 marks easily by obviously you have to quickly run through this. Assuming you are the CFO, recommend with your justification how risk management responsible. Now remember your paper is CFO perspective to risk. How risk management. Now it is very important because listing rule very clearly says the risk has to be considered by the risk committee or audit committee in that context. This question says you have to justify how risk management responsibilities can be incorporated to governance structure. Which committee is it? Audit committee, risk committee, both, and how, right? How management connect to risk management and how which audit committee or risk committee oversee that. That's the answer, right? Without reading the question, test whether you have the knowledge to answer, right? So that's the knowledge. Then part C. SLFRS, you can definitely expect few marks because remember all non-financial reporting, corporate governance together, you have about 20%, right? There, this question talks about outside in and inside out perspective to sustainability. Now, then again, if you are a mature student, why this type of a question comes in? Because even in your syllabus, previously you had GRI standards, right? GRI standard talks about stakeholders, how companies impacting, right? Company inside, how they are impacting the outside world. If you are releasing wastewater, etc., that's outside in, right? GRI, stakeholder perspective. Whereas IFRS or SLFRS are concerned about how the external environment is impacting my balance sheet, cash flow. That's outside in. That's the financial materiality. That's the answer. 2 marks. Done. See, that's how you test whether you are knowledgeable to answer. Part, right? Answer is absolutely clear. Then, two, explain how proportionality concepts and transitional relief could overcome challenges in the first time adaptation of SLFRS because this is a hot question now. You are in a year 2025. For top 100 company, SLFRS is mandatory by listing rule as well as by the accounting standard that has been issued. So then the key is, do you understand what is proportionality concept? In layman's language, proportionality concept means, right, do what you can do, right? Meaning that company can consider, right, reasonably what they can disclose without spending undue effort. That's the idea. Those words are very important. Without undue, what you can reasonably disclose without undue effort. That's the idea of proportionality concepts. Therefore, right, the standard allows if you are a smaller company, you can qualitatively explain the impact of climate change, right? Scenario analysis you can qualitatively do, right? But another company will quantify. Then there is a transitional relief. For example, that quantification you can wait for 1 year. Scope 3 emission, you have additional year, right? If you are not following greenhouse gas protocol, you have another additional year. Those are relief, right? And open book, if you go to the transitional relief page, this answer also available, right? But how quickly you can get this 6 marks? That's the key. So you have done that now. See, අර උඩ ඉඳලා පල්ලෙහාට එනකොට the answer කරලත් ඉවරයි. That's why if you're a prize winner, when you go through the paper, in your mind, the answer is programmed. And it's a matter of then writing. Okay. Then next question. That talks about, again, accounting standard, right, relating to leasing. And if you have done the leasing standard, the right to use model, right, and then it also, yeah, talks about yeah, yes, obviously, then you should be able to do this question. Another question from accounting standard, then when you look at it, that deals with properties, right? Maybe probably investment property, famous questions in the past, those have been tested. And then again, financial instrument, the questions. Now you can see those standards have been tested. Then our famous pre-scene question where you can get 50 marks. Even now, right now at your hand, there is a telco questions. Very clearly, look at the video. It should be available to you today. CA will upload that. See the way we analyze. I told you one very important advice during my yesterday's lecture, less more strategy in life, not only in exam, less more. You do less, get more. Less hours of study, more. But some people more and more and more, but no results. That's failed approach. Right? Even that 1 hour analysis, that can give you a lot of insights. Now, in this one, during first 15 minutes, if you have learned, you quickly know what I'm talking right now. So now, likewise, those repeated students have gone through this pre-scene about the logistic. Now, I'm not going to read the pre-scene here, but this paper is essentially to build your writing skill and the confidence. I mean, how to face an examination. So, based on this group for the accounting part, they have given two questions. One is acquisition of additional 50% in ocean shipping, right? And the second one is 80% option two, 80% equity share of another shipping company, right? Those. And then they have given some additional guidance when you acquire this. Remember, because why I am reading even this part, if you go to the requirement, always in the exam, before reading the question, you must read the requirement. Then quickly you can think, what should I look for when I read the case? Now here they say, advise the management with required calculation and explain based on the standards how the transaction referred to above would impact the net asset equity attributable to shareholders of the company and the NCI under two alternative options. So both options you have to consider, right? Now that's something to do with two options, and then obviously you have to read that and see what. Then the part B, you can get 20 marks. That 20 marks is very important. It is a small para only, right? Usually this 20 marks like that. You don't get a lot of information, very little, and it's totally from pre-scene if you look at some of the past papers, right? That's where this 20 or 15 becomes so relevant in your pass mark, right? During the last board meeting, finance director, sorry, again, we will read now without the case study to see how knowledgeable you are, right? We'll test in 2 minutes whether you can get this 20 marks. One is, this is repeatedly tested in the exam, the examiner. Using the information given in the case, analyze the component of internal control environment. Perhaps this question can be misunderstood, right? How? Are they talking about components of COSO? Then you are talking about all the 5 components of COSO, starting from control environment, the risk assessment, control activity, information system and communication and monitoring. Those are the 5 components. The other way, which is explicitly given in the exam, is to talk about internal control environment. There is an additional word internally, but it is in that way control environment. Then you are looking like Champio, right? That when I word Champio, it has meaning, right? So in that control environment, we are looking, for example, code of conduct, the integrity and ethics, right? The corporate governance aspect. To what level non-executive directors, audit committees oversee financial statements, assignment of authority and responsibilities. And then if you are a good student, you can straight open the page, control environment component, just write the first bullet points very quickly, first five bullets, you can copy paste, but don't only copy paste. You should also copy paste from the pre-scene. That is why prior to the exam, when you go through the pre-scene, you will identify the pertinent information which we will feed into these 5 points. That 10 marks is very, very relevant. But I am showing answer where for your own benefit, right? Not only control environment, the entire course of 5 components are analyzed. That answer I will show you. I mean, then you, both way you can write, no? So because control environment is one part, if you look at all five, that's the bigger question. Then this is another question with the syllabus revision in 2013, which some of you may not know. What are you talking? Which syllabus revision? Not now syllabus revision. When the CFO perspective was brought in, your purpose totally is to see how business risk. Now, for example, this case study, even CA case, SL5 case study also this time logistic. Now, one of the big risks for logistic industry was the overall business outlook. The global trade significantly reduced, and they want the immense pressure, the fuel prices to all of that. And that impacted their financials. So now if that is the one answer you can write here, how business risk is connecting to financial statement. If you bring that connectivity, you will get these 4 marks. So from pre-scene, can you identify that? The next question, now this is the beauty of the connectivity between financial reporting and risk. Now, out of those two options which we looked at, acquisition. Now, you go back to that question. What are the two options given? Right? The two options are these. Right? One is a 100% acquisition of OSL. The other one is this ANC acquisition, 75%. And there it says, when it comes to purchase consideration, right? 75% of applicable share of the fair value. Right now, purchase consideration include immediate cash. Why this word immediate cash is important? Because sometimes purchase consideration can be deferred dose. Then you have to discount it and take. Right? Then this is the share. An additional 50 million. In addition to this, another 50 million is paid. Is payable on 26. If there's an if condition, can anybody tell me, use the chat in accounting standard, business combination, right? Even the consolidation. What is this consideration? So there is immediate consideration in cash. This is deferred, plus there is another element to consideration that's called, very good, contingent consideration, right? So now it is required in business combination to fair value the consideration. Now, in this case, you need to fair value the contingent consideration with this probability, right? Because it says if they record a revenue of 75%, this growth, the unlikely, now it talks about probability. This growth is unlikely by management, leading to an assessment of, that is why you are assessing the fair value of contingent consideration at the acquisition date, which is 20% of the fair value, right? How do you decide that 20%? Why not 25%? Right now, what is the probability involved here? That is by itself, remember, leading to risk of misstatement wrong. If you read now, look at again today's video. Yesterday, I spent a lot of time to explain to you CFO's perspective of risk in telco, revenue recognition, by taking into account the inherent characteristics of the transaction as well as control risk. Now, in this case, the inherent risk of that, the significant judgment of taking the probability and deciding this contingent consideration involves risk as a result, it may be misstated. If you write that answer, you will get another 2 marks in addition to accounting treatment that you are writing in this part of the answer, because the below question talks about ROM, risk of misstatement, and blue financial statement in relation to the above two. So this is one. Then if you go down, again, so can you capitalize the professional fee in the acquisition? Those things you must quickly know answer yes or no, right? And then when it comes to OSL books, the other scenario, that is where, because there's another acquisition involved, and it talks about Inland Revenue has issued an assessment of 55 million penalty, and that is not yet finalized. Now, how do you deal with this when it comes to consolidation? Again, can you explain from accounting standard perspective, how do you deal with it? Right now, is this a liability or a contingency? Hmm? So liability is a liability, right? So when something is contingent, when? Huh? Contingent, right? Why it is contingent? Because the amount, what I mean, is uncertain. So there, when it comes to business combination standard, your fair valuation is based on two things: identifiable assets and assumed liabilities, not actual, assumed liabilities. So again, it involves significant judgment to look at. And actually, we don't know whether this actual one is 55 million or not. And beyond that, it talks about brand name. Now, this is, sorry, trade name registered, then they are going to value the fair value at 30 million. Now, again, this is relevant from risk of misstatement perspective, right? How that fair valuation being done. And obviously, there is this word is critical word you can write down in ROM terminology, management bias, right? Usually, when these type of fair valuations are done in acquisition deal, right? So therefore, risk of misstatement can be higher. One is due to complexity, judgment, right? Management bias, and those are characteristics of ROM, especially inherent risk. That's the conceptual understanding you need to have. If you write this, you will get marks, and I will show you how it is written. The same way that I explained, the same wording that is being used in the answer. And the only thing you need to have confidence. Now, see, when you write those 2 points, you will get 6 marks for that. What are the 2 points? The uncertainty associated with contingent consideration, right? And then when it comes to the other acquisitions, specifically, how do you ensure that contingent liability is really represent the value of liability at that date, as well as the intangibles, which is fair valuation of, so the risk associated with that. So that is why this question says consolidated financial statement, right? Not at individual financial statement level. Whereas the previous one is just talking about the company, right? Based on the pre-scene, how do you connect business risk? And yeah, now that way, what I did now during the last maybe 10-20 minutes to run through the entire paper, I even read some of the accounting standard related questions, which took little time. But the point is, when you do this reading by spending quality 15 minutes in the exam, everything is well planned. Now, how fast can I score? That's like a battle. Every minute, can I score a mark? Right? That way, if you really plan your answer, again, less more is critical in exam. If you think that you are writing so many pages, I mean, don't think that you are very successful. Smart answers, bullet point to the point, you will get the mark. If you write very long essay answers, the risk is high. Right. I hope that shed some light about how to face the exam. Now, let's see how these answers are written. And we'll start with uh, the first question and ask any questions. Huh? So the first question is about uh, corporate governance, right? Now there, if you look at this company, uh, Nature PLC, a large conglomerate, Now we know why we are answering this question, because we have read it already. The question, are they going to form a group audit committee? Can they do that? Audit committee charter, what need to be there? 4 marks. And then how we can connect risk management responsibility. So let's see what's in the case study, right? So it's a large conglomerate and they have SBUs, and with the section 9 of the listing rule, the company is in the process of revising the corporate governance code. So Mario is the CEO and chair. Now see, here it's not combined, but don't write those. Those are not required in the answer. That's again because some students without write, they will write weakness in corporate governance, right? Don't do that because it's not required, right? And then the other one is the board consists of 4 executive directors, of which 3 members represent family members, right? Uh, Now, these 3 non-executives, 3 represent family, right? 3 non-executive directors were appointed to the board in. Uh, Now, another 3 out of 4, 3 are family, another 3 were appointed in 2015. Non-executive directors include Mr. Sandy. Out of those 3, one is Sandy. He's a son. Now, why this paragraph? It talks about independence, right? The son, Sandy, is obviously not independent. And also be mindful that those directors who were appointed in 2015, now 2025 10-year rule violated. And again, they are not independent, but don't write that in the answer. Not required, right? That is again to mislead you with this information, not relevant, right? But this is maybe relevant. The group has 2 other listed company, right, which have their own audit committee, which is chaired by a non-executive director. But do we know this non-executive director is independent? Do we know under listing rule, the audit committee chairman should be a qualified member of a accountancy body? That is relevant answer, right? When you form the new audit committee. And then, but here their subsidiaries have separate audit committee. Now the proposal is to form one committee. That is possible to do, provided that audit committee chair has to be independent, and then audit committee to have 3 directors, and then the audit committee chairman to be a member of a professional accounting body. The company is considering, yeah, this all listed company without having, now this is what they ask. In further, it was debated during a board discussion how whether separate audit committees, risk committee is required. Can you tell me using the chat, is it required to have a separate risk committee or not for a listed company? Let's see how good you are in your knowledge of listing rule and the corporate governance. Yeah. Anybody? Do you need to have a listed company risk committee? Can you answer that question? Yeah. Yes or no? No answer? Yes, needed. Niluka says yes, needed. No, it can be considered by the company. It can be considered by, yes. Some says yes, yes. Different answers, right? I'm asking whether listed company should have a risk committee. Yes, but they can have both together, right? There are different answers. No need to have 2 committees. Okay, right. What is the answer? So remember, the answer is in banks, risk committee is required. But in other entities, if you want, you can have a risk committee. But if you want audit committee to handle risk, that is possible provided audit committee charter clearly indicate risk management responsibility. So therefore, in your part A answer, you might say that as well, audit committee charter to include risk management. And look at your corporate governance code and go to the page number of the charter. There's an annexure. That annexure shows what need to be in the charter. That's how very quickly you can write the answer. Now, this is how answer should be written, right? Now, see the answer, bullet point to the point. We are not talking in this answer about the board composition, irrelevant. Only what is relevant, very short answer, right? As per listing rule 913, audit committee, right, need to have an independent director, chairperson, and he or she should be a recognized, member of a professional body, 3 directors of which 2 shall be independent, right? And listing rule allows, right, parent company to function as the audit committee of other listed company. That's the big point that you have to answer in this question. You can have that. Then talk about the case study. It appears that currently there are no independent directors in this company because one is a family member, right? Other directors have served more than 9 years, so they are not independent. Further, the current chair, we don't know whether he's a member of accountancy body. The audit committee should be reconstituted based on the above criteria. That's it. Next part examine is asking what need to be there in audit committee charter. The purpose of the audit committee, that is to provide objective review and oversight on financial reporting, auditing and internal control that you can take straight from the book. And then purpose is one thing in the charter. Now, without going to next page, can you tell me what are the other things in the audit charter? Number two, the authority given to the audit committee to access to anybody in the organization, any information which is required. Number three, the composition of the audit committee, the meeting frequency, meeting quorum, and responsibilities. The bigger part, if you are doing audit committee charter, what audit committee should do. The listing rule says, if I'm not mistaken, about 17 areas of responsibility overall. But when you write this answer, you can also emphasize that as a part of the last question. If they don't have a risk committee, audit committee should also look at risk management part in addition to their role in number one, financial reporting, number two, internal controls, number three, the review of effectiveness of external auditors, number four, uh, whether external auditors should provide NAS, non-assurance services. Next, the role of internal auditor, the effectiveness of internal auditors, right? So likewise. So now we will just give me a minute. Right. So the other areas, like I mentioned, authority composition. Now, this is a very important question, and I want you to answer. Now, can anybody use the chat and say how risk management responsibility can be integrated to the overall governance system, right? Yeah, now students, this answer is going to be distributed to you. And some students asking why although I discussed briefly accounting section, I am only doing in this lecture the corporate governance and risk related area. And Dr. Isuru will do the accounting related aspects and the full answer will be sent. But this part of the answer can be shared with you if you are so eager to listen to it prior, and I'm sure earlier the better. So then I want you to think, how do you answer this question? How risk management responsibility can be incorporated to governance structure? Don't think that's a very, I mean, you can easily answer and get 1 mark, but if you want to get about 3 marks, your answer has to be mature. How do you answer that question? How do you connect risk management responsibility to the governance structure? So the first thing you must write is now new corporate governance code requires the board to consider risk management, specifically company to have a risk culture, risk policy, risk framework, right? And risk appetite set. These words, did you hear? Shall I repeat? Risk culture, risk framework, right? Risk process, and then risk appetite. These are board level responsibilities of the risk. That's what board should do. Which committee? Now we already discussed audit committee or risk committee, right? If there is no risk committee, audit committee will do. Point one. Point two, remember, just because you have audit committee, risk management won't work in the company unless you have a structure. Who is going to do from management, the risk management part? Is it the internal audit department or risk department? If you don't have a risk department, how it can be done? That is where framework like three lines model can be useful. I spoke about that during my yesterday's lecture as well. And there, the first line is those who are responsible for risk, the ground level management. The second line is where the risk management comes in, that to make sure that the first line really identify and manage risk. And the third line is the internal audit. So that's a very powerful tool, three lines model. Now see, this is the answer. So this answer, first part, you can take from the corporate governance course. See the word that I mentioned to you, right? The board. New principle requires to have a risk policy, framework, right? And that area can be delegated to risk committee or entire board, right? And this is where they say whether it's a risk committee or audit committee. And then this committee, if you have a risk committee, they say that how many members, three members, majority should be non-executive, all of that. So there is a flexibility given. The flexibility is given. Why that flexibility? The same flexibility is given in the listing rule also. Listing rule also says that you can have, separate committee, audit committee can do. Then the other part that I mentioned to you, if you want to embed this, you have to look at the management role. In addition to above committee, company should structure risk management responsibility within the management structure, right? How? To ensure risk management is integrated to the business. Three lines model can be used, for example, right? Where the frontline manager is responsible for managing risk, right? And then the risk management function can support it, and internal audit can be the third line, providing assurance on the risk. And then obviously you need to have either risk officer, chief risk officer, or internal auditor. If internal auditor is doing it, how to do it without conflict of interest. Now that's a mature answer to get all the marks, right? So that's where now this time code of best practice on corporate governance include risk management, which you need to be mindful, right? Then sustainability, which I explained to you, already I covered using the view outside in, inside out approach. All right. Outline options available for organization to report on sustainability. Now, the current pre-scene that you have, primarily dialogue if you take, right, they have been doing reporting on GRI standard. And I told you sustainability again. Okay, let me share with you a very interesting slide on the SLFRS so that you will understand that. Uh, yeah, so please write a note outside in versus inside out. Sharing my screen again. Are you able to see to explain you the outside in and inside out? Right now, this also I'll take as opportunity for you to understand, right, the essence of IFRS or SLFRS sustainability standard, right? The essence is to disclose sustainability related financial information, right? So then the question is, what are sustainability related financial information? Uh, that is SRRO Remember, SRRO are those that's going to have an impact on your cash flow, access to finance, or cost of capital, not only this year, maybe next 2 years and beyond 5 years. That's where you have to define what is short term, medium term, long term. What is going to impact your P&L, right? The cash flow specifically, right? Your ability, because if you are not sustainable, you will be out of the business in another 5 years' time. Imagine you are relying on water, right? For you are operating in a location, suddenly the water supply stop, you can't continue and you can't relocate, you're out of the business. That's where this is SLFRS is more concerned about what? Outside in, right? Rather than inside out. So, in doing so, you need to explain four things. That's where this topic connects to corporate governance, right? You have to disclose not only this, but information about governance, your corporate governance, how it connects to sustainability, which is in your corporate governance code, strategy, right? What is your strategy of dealing with SRRO, and is it connected to your risk management framework, which we just spoke? And then what are your metrics? How do you measure your emission scope 1, 2, 3, and other targets relating to climate change? Now, the whole standard deals with SRRO. Now, this is outside in. Why it is outside in? As an organization, the standard use two things. You are depending on resources and relationship. Actually, this point one is outside in. Why? Because when you rely on resources and relationship, imagine there is no water. Oh, you have a relationship. I'm taking an example now. For example, if you are in this example from say apparel industry, right now China, if cotton is used from Xinjiang region, right, there is a penalty. You can't, because that is prohibited by US law if you export into US. So then you are having a relationship with somebody, right? Now if that is detected, your shipment is held and you can't move, and your PNL is affected. You are in danger. Now those relationship or resources, if it is impacting you, that is outside it. Whereas you see this picture is very clear, right? Now, GRI standards very keen on how you are impacting stakeholders, right? So that is impact created by the entity, right? I just use that to explain SRRO. But if I go to the answer which is expected here as outside in and inside out is this. Now, if a company is using GRI standard already, remember which is in your syllabus anyway, from the beginning, the integrated reporting, GRI, all of those in your syllabus, and in some papers, last maybe one or two before, examiner tested even capitals, right? Okay. No, now you should be able to see. I'm again sharing. Huh? Are you able to see my screen now? I reshare the yes. So now, uh, sorry, I want to share the answer. Right now, you can see the answer. Okay, so outside in approach to sustainability is the focus of, please write this word, financial materiality, which investors are interested in, because investors are interested how external sustainability risks like climate change. Imagine if the temperature were to rise significantly and you have a larger workplace, and this is happening in countries like Bangladesh, the heat level goes up, people don't come to work, you can't do production, and it's affecting your cash flow, right? It's real. And then due to huge the uh, flood, right, the climate risk, you can't say your factory or the manufacturing location is affected and you can't again operate. Those are outsiding, right? And which the investors are interested in, that's called financial materiality. So outside-in approach is how external sustainability risks affect companies' financial performance. According to S1 and S2, what are the things it says? How it is going to impact the SRRO. This is actually SRRO, how it is impacting your cash flow, access to finance, and cost of capital. Access to finance or cost of capital, right? That is IFRS. So company can actually, now company has to, if you're a top 100 company, you have to use it. And then inside out approach is the stakeholder approach, right? That's called stakeholder focus approach. And even double materiality is something that it consider both inside in and outside, outside in and inside out. So inside out is how organization is impacting the society and people out there. If companies polluting the air, right, or polluting the water, or impacting the community in a negative way, those are inside out, right? And GRI standard, they call, please write, material topic in GRI frameworks are those that are impacting wider stakeholder framework, right? Now, what are the options available to company while they are doing GRI? They can also use IFRS. And also they can use integrated reporting. Why? Because in integrated reporting, the capital is equal to what I explained to you in my previous slide. I said the organization is dependent on two things. They have dependencies and relationships. Dependent on water, relationship is supply. So those dependencies and relationship in integrated reporting are called capital. So therefore, integrated reporting is something that directly support SRRO and outside in. And in addition, if companies using GRI framework, they can address not only investor. So here the focus is investor, right? They can also address the wider stakeholders. And that is why, that is this point, using both the framework include balanced reporting to meet both investor needs and, right, that is financial material and broader stakeholder needs, right? And if you look at ESRS, for your knowledge, European Sustainability Reporting Standard is based on double materiality concept, which consider both financial materiality and impact materiality. In GRI, it's called impact materiality. So I hope you understood that. If not, please let me know. Then I explained to you the proportionality concept. What did I say? I said do less, right? Proportionality concept also say do less, right? But it says don't spend a lot of money. It says it recognizes that, there are smaller companies and bigger company. So if you are a smaller company, right? Anyway, you have to look at this. This is the critical wording that you must use in your answer. When deciding your disclosures, do reasonable, supportable, and available thing. Don't spend a lot of money and cost. That's the key thing. If you're writing to මේ ප්‍රශ්නට උත්තරේ ලියද්දී මේ ටික නැතුව ලියන්න බෑ. This is critical wording, this one, right? This is called proportionality principle in sustainability standard, right? So you have to, because there are many disclosure requirements. Remember, S1 talks about doing a climate related scenario analysis. What are the scenarios you are taking? Is it Celsius 2 degree, 3 degree, 4 degree, and how it is impacting your financials? It's very complicated. You have to do elevation model, etc. But don't need to do that. You can simply explain if temperature were to rise, what are the things you can do qualitatively. So reasonable, but it has to be supportable, at least publicly available scenario you have to take. And then available without undue cost, right? No, all this is from the standard, students, right? Now one is asking, so is this included in the standard? This is directly in the standard. Anywhere in the standard, I don't have right now standard. If you now open the standard, Control F and type reasonable, supportable, it will appear in many places in the standard, right? Proportionality principle. And then in some cases, qualitative approaches, the other part of this proportionality principle is if you don't need to do a lot of financial modeling, describe the impact of climate risk, right? Qualitative approaches. Example is the same one I told you, scenario planning. Scenario means there is a scenario of a, there are different global scenario. If you now Google ICE scenario of climate change, if temperature were to go to 3 or 4 degree, the planet is so warm, we can't operate, right? That those are the scenario, how it is impacting you. Then, if you do that, it helps the complex areas like your emission, scenario analysis, and quantifying the financial impact. Then the transitional relief or the specific relief given, which I already spoke, right? So, for example, in the first year, you don't need to report prior year figures, right? And company can use method other than greenhouse gas protocol during the first year. Because, for example, some companies use ISO framework for greenhouse gas, but IFRS, LFRS requires to use greenhouse gas protocol. Again, you are given a 1 year exemption. An entity is not required to disclose scope 3 emission, which is very complex. Again, yesterday I briefly touched the scope 1 emission is what is burned inside the company, right? Scope 2 is what you purchase. If you are purchasing steam from outside, the electricity that you are purchasing, right? So those are scope 2. Scope 3 emission is your value chain. If you are a manufacturer, what your suppliers emit is scope 3. And your employees going home, right? They are using their own vehicles. That emission also part of scope 3. Like that, scope 3 has 15 categories. Based on your value chain, you need to understand yours and the relevant 15 out of 15, what is relevant, and account for carbon, right, using the greenhouse gas protocol. That is very complex. If it is a bank, it's called finance emission. Now you are giving a loan and that party is going to use the money of the loan and do activity that generate a lot of emission. So if it is agriculture emission. If they are constructing, how to calculate those emission, very challenging, right? In a bank, it's called finance emission. Right now, that first year you have a relief. All right. Then we are coming to the next question on the internal. I said the paper says internal control environment, but I am giving the answer I am discussing for the whole course of framework. Therefore, there is a note here. The answer is provided on all 5 components of internal control system rather than limiting to control environment alone. So now this is 10 marks questions. If you want to get this 10 marks quickly, open book matters. Don't memorize. That's the power of open book. And you know, COSO has been tested in many papers. Even this time there is a possibility. So go to the auditing, go to the your relevant, the supplement, which is a chapter in the study text. And the control environment is explained. This paragraph you don't need to memorize. You can borrow from the book, right? But if I simply explain to you, control environment, one word is shown at the top, right? At a board level, the overall standards, the processes, structures that are there to make sure internal controls operate, right? And see, this word torn at the top is critical when you write this answer, right? That means how important internal control. And then you have to read the case study and pick some points that suggest the control environment. For example, the code of conduct, integrity and ethics is a very important aspect. Now, when you go through the previous pre-scene, these information I picked from there, right? Code of conduct, ethical standards, that is a part of the control environment. The company has developed their code and ethical standards, and also the roles and responsibilities are defined through the SOPs. Another important part of the control environment is the oversight. To what level board of directors are challenging the management? That's the corporate governance. If they have independent directors, the composition and structure of the present board, this is all from pre-seed. Now, this what is seen here, these bullet points are extracted from pre-seed. The composition and structure of the present board of directors ensure diverse skill mix of executive and non-executive directors. So there's a good mix of executive, non-executive, and there's audit committee with independent directors. They oversee financial. This is all points relevant to control environment. Then the risk assessment is the dynamic process. I spoke earlier under corporate governance, how company identify, analyze risks that will affect the objectives of the organization. Then what can we pick relating to the case study? So when we looked at the pre-scene, the case study mentioned that board oversee companies. There is one paragraph, it says they have implemented risk management, right? But very clearly, case study talks about failures to manage risk. So that means the risk assessment is not really good. They have failed, for example, fraud risks, regulatory compliance, data breaches. So that suggests that the risk assessment process has to improve. Then the control activities are those once you identify the risk, then how are you going to mitigate, right? The actions established by the policies and procedures to ensure that management directives to mitigate the risk, right? Those management directives are carried out. For example, if there is a cyber risk, how company is going to control their internal data, the backups, and what policies make sure those testings are done are control activities. So practically, control activities. Now, this is your knowledge. Control activities should include what? Authorization. Now, without any book, I am writing this, right? Authorization, fundamentals of control as a CFO. Future CFOs, you must know authorization, segregation of duties, review of reports, which we call business performance reports, reviews, right? And then the other important thing is IT, application controls, right? That's very important area. Right, so these are critical when it comes to control activities. Right now, here case study. Now, we can pick this para from the case study. There are several weaknesses in the control activities. Right, especially they say segregation of duties, created opportunity for fraud, conflict of interest, unauthorized transactions. Right, so this is given in the pre-scene, very clearly supporting the control activities. In addition, external auditor has raised concern about the various concern about the company, right? Basically, the financial statements reported errors. The other part of the course of framework is how sound your information system. Students, there it's about how, if you have, even I explained this extensively in my yesterday's discussion about current pre in telco, right? In telco, how information is passing through various systems to their GL. The systems include their, switch to billing systems and the GL. Now here again, because they are operating in multiple systems, right? For freight forwarding, things like that, how the information is getting connected to the financial statement. So again, you can write a general description and pick some from information from the case study. So here you can say that they are largely using sophisticated information systems, IoT, blockchain. Now those can have an impact, right? Unless those are designed properly. And yeah, and the other area which is relevant is how information is passed to the general ledger and journal entry, which I already explained. The last part is who is going to check whether internal controls are working, and that is usually internal audit. So the case study mentioned that the company thoroughly review the current process. There are reviews that are happening, right? Changes to SOPs are there, but however we can qualify, there are a lot of deficiencies in the above in risk management and internal control, right? And therefore, internal audit has to play an important role in reviewing those areas and then reporting to audit committee. So that's the course of answer for 10 marks. Looks boring, but you must know how to write this type of answer. Now, if I ask you as a homework, do this for the current pre-scene. Can you analyze the course of 5 components of your telco case study? Fantastic if you can now write the answer, right? So likewise, now we'll come to last, which I already explained to you. I can quickly show you how the answer is developed. So I already said, one of the major business risk in logistic business was that industry, deterioration of the industry, right? Specifically, the adverse macro and industry environment. See this word, create a pressure. So the main business risk is they are under pressure to achieve their profitability, and that pressure arises from the business risk in the logistic industry. Why it is coming? The global trade has significantly reduced over the past. So these, and there was Red Sea issue and so on. These adverse business condition may result in, see this word, overall risk. Now, when companies under pressure, you can't say which account balance is going to be impacted. It is the overall financial statement risk. Now, this is again in your syllabus. As a CFO, you must know now with this multiple pressure, even CFO is under pressure to change anything and achieve the bottom line, right? That's called overall statement, not assertion risk. These are very critical concepts you must know when you answer. I am again emphasizing this is not auditing, but having said that, as a CFO, you must know how overall financial statements can be affected and how an assertion can be affected. Again, in my yesterday lecture, I explained to you, which you can watch today, revenue recognition in telco as a business risk, revenue leakage and how it is impacting completeness and cutoff assertions. That's critical knowledge, not from auditor's hat, but as a CFO, right? Know that, understand that concept. Therefore, otherwise, the auditor will come and say, look here, there is a CAM in your audit report. What CAM? Right? Cake. So the CAM is a significant risk. Why there is a significant risk relating to those assertions? As a CFO, you should understand that thought process. Right? Now, we have to convert this business risk to ROM. Therefore, see this answer. There may be, this is a keyword, management bias is a characteristics of ROM. In recognizing those balances, now companies under pressure, therefore there is a bias in imbalance, right? Which balances, specifically those balances that have significant judgment and assumption. Can you give some example from the balance sheet? Yes. Impairment of non-current asset, intangible assets, impairment of receivables. Those are significant balances given in the pre-scene. Similarly, there could be management override of control. So these are the fraud risks. And secondly, the revenue recognition is another area that you can mention as a business risk as well as wrong. Why? Due to two reasons, complexity and a fraud risk. Now, why complexity? Specifically, they have multiple businesses, specifically on the freight forwarding that involve multiple systems to capture revenue, and they also use some technologies. And because of the inherent complexity, there is a risk. How do you recognize revenue in freight forwarding business? Right? You have to rely on some others information system or the vessel sale and so on. So that complexity is there. In addition, the fraud risk factor, right? The fraud risk factor, why specifically earlier one is general for all the financial statement, but this one is, remember, rebuttable presumption about revenue. So again, from the risk knowledge, that the first line item that can be affected under revenue is the, under fraud is the revenue. There's a presumption that always there is a risk of revenue. So you can use both and say there is a risk of revenue. One is due to complexity, other one is due to fraud risk factors. So that's another answer. So, and then the consolidation part I already covered. How, when it comes to group financial statement, those fair valuation of contingent consideration, and then the tax assessment, then your intangible trade name, right? So this is how you write that type of answer again from a risk perspective. Here, fair valuation of identifiable assets and assumed liability involves significant judgment, significant assumption and judgment. Give example, purchase consideration include this 50 million, right? And that valuation requires it is a subjective, right? Which is subjective to significant assumption like what? Revenue growth, whether revenue will grow, what is the discounting factor involves, right? And the judgment. So these judgment will impact the goodwill. So therefore, this is a significant risk in the financial statement. Similarly, The contingent liability relating to tax assessment need to be considered, and the accuracy and completeness of that amount to need to be determined. And in addition, last, the trade name valuation again as an intangible that involves significant assumption and journey. Students, in short, one tricky word, critical word, not tricky, is to use this significant assumption, judgment, and give example wherever possible. Then your answer connects, right? So those are the risks from a group perspective. I think with that, I have covered everything, right? Now, do you have any questions? If not, I'm going to close the session. If there are any questions, we can quickly take. And I hope this gives you some knowledge about writing answers, which is what is very critical, right? Any questions? And now you should also analyze your case study, the possible question, and write your own answers. So now let's see some of your questions. Yeah, now these are the question. Do we have to write all five components to a similar question? No, no, no. See, the way in the exam, always be very clear. If it is a control environment, it is the control environment. If examine asks five components of internal control system, then only the five comes, right? Yeah, so you are correct, Tomeshi. And then where is the available lecture? Yesterday I am talking about the lecture that was done at CA, pre-scene discussion that will be available to you today. Uh, then and any highly possible areas I covered in my yesterday lecture, specifically, telco, revenue recognition, those key audit matters given, look at from a CFO perspective, listing rules, things like that. And yeah, now the listing rule students, if I tell you in 2 minutes, right? Certain new topics in listing rules, specifically fit and proper criteria. Study that. All right. The independence has slightly changed. The independence criteria in the listing rule, and the bigger change is now the audit for that is there in our code as well. The audit committee chairman to be a member of a qualified body, and then in terms of some committees, the audit committee, risk committee matter that we discuss. Likewise, the listing rule, those mandatory committees, right? The audit committee, nomination and governance committee, it talks. So those areas you need to go through. So when it comes to the listing rule, even yesterday lecture, I spoke some part of some amount of this. I actually shared my presentation also with CA. That is a comprehensive presentation yesterday. So you will get today with both presentation and the lecture material, right? Sorry, the recording and the presentation. Any more questions? So don't too much worry about listing rules and corporate governance. You have to study together, right? Because what is critical if it is a listed company, listing rule, right? Whereas in CA, some areas they are stringent. But listing rule has made very clear certain areas. For example, now they are very clearly talking about the SID, the audit committee's role, audit committee, risk committee integration, and whether group audit committee to act as a audit committee of subsidiary, not only that, similar other committees. So likewise, there are specific changes, and ESG is specifically brought in under new. Remember, that's very important. There is a new listing rule that requires remind companies to, that's the listing rule. New listing rule, please be aware. That listing rule says company has to prepare financial statement not only with SLFRS, but SLFRS sustainability standard. That's the listing rule. New listing rule issued recently, about few months ago. That simply says you need to know about SRR. Yeah, so management now see in this previous question, the fraud risk obviously it's a business risk, right? Now, any fraud, any risk management framework, look at course of internal control framework, the risk assessment section has specific sub-point of fraud risk assessment. The fraud risk is a business risk. That fraud risk can impact your any of the financial statement assertion, overall or specific assertion. Like I explained to you in the case study, I use actually fraud risk to one fraud risk is coming from business risk, right? So fraud triangle, right? Incentive or pressure can arise from business risk. That's where fraud. Similarly, management override of control can be connected, right? So remember, the key thing, students, is not audit risk, but risk of misstatement. The audit risk comes when you combine all three. No, detection risk is not relevant here. Thinking like a CFO is what is critical, and that is a syllabus change. I again remind you. So don't waste time about learning auditing here, right? But look at latest 2, 3 papers to understand how examine is testing risk of misstatement in financial statements, right? Any other questions? All right. Yeah, so I recommend you watch yesterday's, CA webinar, will be very useful. And then my last advice to you, remember, like I said, what? Less, more strategy. So you have very, very limited time. In that limited time, how do you get the maximum? If exam is tomorrow, what should you do today? If exam is day after tomorrow, you may do little more than that. And what is that more? And if you have 5 days, this is what it is. So that strategic approach is very critical. If you just look at many notes and read answers and go with without firm preparation, you are at risk. The biggest risk is what I explained during first 10 minutes, how you study the entire paper and decide your approach. Specifically in the ABR paper, this 40% is a game changer, right? Why? If you do your console and accounting standard fairly well and add this 30 out of it, and passing is guaranteed, right? In that way. But whereas if you struggle to do all the accounting question and in half an hour trying to approach this area, and you will not get marks. Yeah. So I think the balance part, 18th, Dr. Isuru will conduct the balance part on, I think it's 18th. You can confirm what I heard, it was 18th. All right, students, with that, I wish you all the best. And this is your last exam. And your next is case study, and all of you we can see you as members in future. All the best. Thank you very much for your words of appreciation. Wish you all the best again.